Hello viewers, welcome to my channel. I am Hashim Ali Khan. In this video, I am going to explain you some more perquisites. Under the head income from salary, we have four elements: salary, allowances, perquisites, profit in lieu of salary. In these four items, the most important, difficult, the provisions are for perquisites. Easily we can find out what are the items that may come under salary. Easily we can remember the provisions regarding allowances, but perquisites, number of provisions we have to remember. Already I told you, perquisites are those benefits which are given by employer to employee or their family members, either in cash or in kind. So Income Tax Act has given the provisions how to calculate the value of perquisites. So far in the previous videos, we have seen some perquisites like rent-free accommodation, concession in the matter of rent, interest-free loan given by the employer to the employees, similarly concession in the interest rate on loan given by employer to employee. All these provisions we have discussed, we have solved the problems in the previous videos. Now continuing that, in this video I am going to explain you the provisions for some more perquisites. Remember, if you remember all these provisions, then only you can be able to solve the comprehensive problem of computing income from salary. If you remember these provisions, then only it will be helpful in solving the problem. Otherwise, every problem you will come across new point. So concentrate, watch till the end, don't skip in between. I told you earlier, you have to keep a continuity on watching these videos. In between, if you skip, you cannot be able to understand it. So my suggestion, if you have not watched earlier videos, go to the playlist of my channel. Select the subject income tax for the assessment year 2021. Select the topic, select the video of income from salary. From beginning you watch, definitely you can be able to get the good command on this subject. Now in this, the first perquisite I am going to explain you is holiday facilities. Sometimes the employer will give holiday facilities to the employee or their family members. Then the employee or family members are availing the benefit, traveling expenses, then accommodation expenses, then apart from that tour expenses and any other expenses which are paid by the employer or reimbursed by the employer. So this perquisite is fully taxable in the hands of all employees, all SSEs. So this is the provision regarding holiday facilities. Not much complications are there. Now expenses paid by the employer on credit card. Sometimes the employer will provide the credit card to the employee or the family members, and the expenses on that credit card will be paid or reimbursed by the employer. Then it is a taxable perquisite for all the employees. Next one, club membership fee. Sometimes the employee or the family member become a member of a club to get recreational facilities from the club. So expenses paid on the club by the company, by the employer, is fully a taxable perquisite. Next comes use of mobile assets. Use of mobile assets. Sometimes the mobile assets are owned by the employer, by the company, but freely the employee or the family members are using those movable assets. The ownership, who is the owner of the movable assets? The company, employer. But who is using the benefit, who is using those assets? Employee or the family members. So Income Tax Act says, if the company or employer owns a movable asset and that movable asset is used by the employee or their family members, then it will become a taxable perquisite for all the employees. So here I have given, if the employee or family member uses any mobile asset belonging to the employer, it becomes taxable perquisite to all employees. The term mobile asset does not include the following. Income Tax Act has given that these will not come within the ambit of mobile assets. Computers, laptop, any other asset which are valued as perquisite according to Income Tax Act, like washing machine, furniture. So how to calculate the value of the perquisite? The value of the perquisite is if the asset is owned by the employer. If that asset is owned by the employer, 10% per annum of the cost of the asset. So we have to see whether the mobile asset is owned or hired by the employer. If the asset is owned by the employer, 10% of the original cost of the asset is the value of the perquisite in the hands of employee. If the mobile asset is hired by the employer, actual hire charges paid by the employer. Sometimes the mobile asset is not owned by the employer but hired, taken on hire and given this mobile asset to the employee. In that case, whatever hire charges paid by the employer, that is the value of the perquisite in the hands of employees. So these are the provisions regarding movable asset of the employer used by the employee or the family members. Next one is sale or transfer of any movable asset. Sale or transfer of any movable asset by the employer to the employee. So presently employer owns an asset, movable asset, and the employer has transferred or sold the asset. Sold the asset. Ownership is transferred from the employer to the employee, and any benefit accrues from that transfer to the employee. Then that benefit is taxable perquisite in the hands of the employee. So when the employer owns a movable asset and it is transferred to the employee or his family member, if any benefit accrues to the employee, then such benefit will be treated as perquisite. The value of the perquisite is taxable to all employees. The value of perquisite is calculated as follows. The very simple provision you have to remember: if an asset is sold by the employer to the employee and any benefit accrues to the employee, that benefit is a taxable perquisite to all the employees. So how to calculate the benefit? How to calculate the benefit arising from this transfer? The Income Tax Act has given the procedure. Original cost of the asset. We will take the original cost of the asset less normal depreciation. For example, if an asset was purchased, a car was purchased by the employer, and the car was used by the employer for 5 years. After 5 years, the company, the employer, sold the car to the employee for a certain amount. For rupees, suppose 50,000. For 50,000 rupees, the company has sold the car to the employee. Now, Income Tax Act says what is the book value of the car. The car was purchased, let it be, for 5 lakh rupees, some 5 years back. So 5-year depreciation. 5-year depreciation, 4 lakh rupees was provided. So 5 lakh rupees was the original cost. During last 5 years, 4 lakh rupees depreciation provided. So what is the book value of the car? 1 lakh rupees. And it is sold to the employee for 50,000 rupees. So 1 lakh rupees is the book value of the car minus 50,000 is the sale proceeds. The benefit the employee gets is 50,000. That is the value of the perquisite. So what is the procedure of calculating? Original cost of the asset less normal depreciation will get book value, less transfer price of the asset will get the perquisite value. Now how to calculate the depreciation? Income Tax Act has given the rate and method. What rate we have to apply and which method we have to apply, Income Tax Act has given. For example, computers. Income Tax Act says this computer is sold by the employer to the employee. Then we have to calculate depreciation at the rate of 40%. Rate of depreciation 40%. And the method to be adopted is written down value or reducing balance method. Written down value or reducing balance method means same. Right? So when a computer is transferred by the employer to the employee, the normal rate of depreciation to be applied is 40% rate and WDV method. For electronic items, any other electronic items, rate 40%, method WDV, same. 40% rate of depreciation and WDV, reducing balance method. Motor car. For motor car, 20% is the rate of depreciation and the method is again WDV. If motor car is sold by the employer to the employee, then depreciation will be provided at 20% on reducing balance method, WDV method. Any other asset, apart from these three, if any other asset is transferred, the rate of depreciation is 10% on straight line method, SLM, straight line method, fixed installment method. For other asset, any other asset, 10% is the rate. So these are this is the procedure of calculating depreciation. After calculating depreciation, we can find out the value of benefit. Now some notes you have to remember while calculating this benefit. Electronic items include computers, digital diaries, printers, etc., but does not include household appliances like washing machine, mixer, etc. So when we say electronic items, it does not include washing machine, mixer, etc. Those are household appliances. It includes computers, digital diaries, printers, etc. Secondly, depreciation is calculated for each completed year if any fraction period of a year is to be ignored. So if an asset is used, for example 5 years and 4 months, so Income Tax Act says calculate depreciation for 5 years. Ignore 4 months. The fraction year should be ignored. Last one, if the benefit value comes to 0 or negative, then we take the perquisite value as 0. That means this balance, this perquisite value should be positive. It should not be 0, it should not be negative. It should be positive value, then only we can take the value of the perquisite, otherwise we'll take 0. So these are the 5 perquisites I have explained. We'll continue the remaining perquisites in the next video. Come on, now we'll start the next perquisite. We are continuing the provisions, the discussion on provisions on perquisites. The next perquisite is free meals. Income Tax Act has given the provisions when free meals are provided by the employer to the employee. When it is not taxable, when it is taxable, I am explaining now the provision. The value of free meals provided by the employer to an employee is taxable perquisite to all employees. First point you have to remember, when free meals are given by employer to employee, it is taxable for everybody, for all the employees. The provisions are, different provisions are given, carefully you listen. Refreshment or snacks or tea or soft drinks provided by the employer during the business hours and in the business premises. It's a tax-free perquisite. The first point you have to remember. When refreshments, snacks, tea, soft drink, these are given by the employer to the employee during the business hours and within the business premises, then Income Tax Act says it is completely tax-free perquisite. First point. Second point, above items provided after business hours, taxable perquisite. The above items, refreshment, snack, tea, soft drinks, if they are provided after business hours, it will become a taxable perquisite. Or outside the business premises, not within the business premises, outside the business premises, if these items are provided by employer to employee, it will become a taxable perquisite. Next one is free meals provided by the employer during business hours and in the business premises. These are the refreshments. We have discussed about refreshment snacks. Now we are coming to the free meals. If free meals are given by the employer to the employee and during the business hours and in the business premises. Now carefully listen. If the cost of each meal is less than 50, tax-free perquisite. If the cost of each meal is more than 50, the excess amount over 50 rupees is taxable perquisite. So Income Tax Act says if free meals are given by the employer to the employee during the business hours and within the business premises, up to 50 rupees each meal, it is fully exempted. Up to 50 rupees per meal, each meal, then it is fully exempted. If the meals are provided over 50 rupees, then the excess amount over 50 rupees is taxable if the meals are provided during business hours within business premises. Naturally, if these meals are provided outside the business premises or beyond the business hours, it will become fully taxable. Now, free meals provided by the employer during office hours and in the business premises through paid vouchers and which are not transferable and usable only at eating points. Now, one more method is given. Free vouchers are given by the employer to the employee and these vouchers are given within the business hours, during the business hours and within the business premises, and these vouchers are not transferable and usable only at the eating points specified. Then what is the provision? If the cost of meal is less than 50, tax-free perquisite. If the cost of each meal is more than 50, the excess amount over 50 is taxable, just like the previous case. If the value of each voucher is more than 50 rupees, the excess over 50 rupees is taxable. If the voucher value is less than 50 rupees, it is fully exempted. Now, free meals provided to an employee in an official tour is completely tax-free perquisite. Suppose the employee is on official tour and on official tour free meals are given by the employer, that is completely exempted. So these provisions you have to remember regarding the free meals given by the employer to the employee. Now medical facilities, now concentrate. Remember all these provisions which I am explaining now, these provisions will come while doing the problem. So if you watch this lecture with full concentration, then you don't find any difficulty while solving the problem. You will enjoy the problem. You will get a good command on solving the problem. Otherwise, every problem will be difficult one. This theory is very, very important. I am explaining all the provisions. Now, medical facilities. Treatment in hospital maintained by the employer to the employee or any family member is completely tax-free perquisite. Some employer, some companies will maintain a hospital, will run a hospital, not for the public, but the hospital is meant to provide the medical facilities to the employee or their family members. XYZ, for example, XYZ company. In this company, an employee is working. Suppose he falls sick or his family member falls sick. He is getting free treatment from the hospital, which is run by the company, which is run by the employer. Then whatever medical facilities he is getting or his family getting is completely tax-free, because the hospital is maintained by the employer for the employees and family members. Next, the employer pays for the treatment of employee or family members in hospitals maintained by government hospital or approved by government is tax-free perquisite. The employer pays for the treatment of the employee or the family members in government hospital or a hospital which is approved by the government. It will become a tax-free perquisite. Next one, any sum paid by the employer in respect of expenditure incurred by the employee or his family member in respect of prescribed diseases in any hospital approved by CIT, Commissioner of Income Tax, is tax-free perquisite. Any sum paid by the employer in respect of the expenditure incurred on the employee or their family members in a hospital which is approved by the CIT, Commissioner of Income Tax has approved the hospital. So any expenditure paid by the employer on the employee's health or family member's health, it is completely tax-free, exempted. Next one is reimbursement. Reimbursement of medical expense incurred by an employee in a recognized hospital. Income Tax Act has recognized that these are the recognized hospitals. So reimbursement means, first of all, the amount is paid by the employee from his own pocket. Later on, the amount is reimbursed by the employer. First, the employee paid from his own pocket. Later on, that amount is reimbursed by the employer. If the expenditure is incurred in a recognized hospital, tax-free perquisite. Tax-free perquisite. Reimbursement of medical expense incurred by an employee in an unrecognized hospital, fully taxed. If the employee or their family members got the treatment in an unrecognized hospital and the amount is reimbursed by the employer, then it is fully taxable perquisite. The recognized hospital, reimbursement is tax-free. Unrecognized hospital, reimbursement is fully taxable perquisite. Now, if the employer pays medical expense directly to the hospital for the treatment of employee or his family members in a private nursing home in respect of specified diseases as prescribed by income tax rules, is a tax-free perk. Example, the Income Tax Act has given the prescribed diseases and says to the employee that if an employee or their family members got the treatment in a private nursing home, on account of the prescribed diseases, the amount paid directly by the employer in the hospital. The employer must pay the bill, medical bill, directly to the hospital in respect of their prescribed diseases, and the amount is incurred in a private nursing home. It is a tax-free perquisite. Next, reimbursement of medical expense incurred by an employee in a foreign country. Sometimes the employee or their family members got the treatment in a foreign country and the amount is reimbursed or paid by the employer. Then what is the rule? Carefully listen here, because these points will come while doing the problem. For treatment of employee or family members, tax-free perquisite. Whatever medical expenditure incurred outside India in a foreign country and that amount is reimbursed by the employer, it's a fully tax-free perquisite. The medical expenses on the treatment expenditure. Then for stay abroad of the patient and one attendant, tax-free perquisite. For staying there, because when the patient is going out of the country, one attendant will also go. The patient alone cannot go and get the treatment there. One attendant will be there. So medical treatment expenditure of the patient, tax-free perquisite. Staying abroad expenditure of the patient and one attendant, that is also tax-free perquisite. Thirdly, for expenses incurred on travel of the patient and one attendant, traveling expenditure, the airfare. Regarding traveling expenditure, if it is reimbursed by the employer, Income Tax Act says see the GTI of the employee, gross total income of the employee. If the gross total income of the employee is below 2 lakh rupees, then travel expenditure is also exempted, tax-free perquisite. If the gross total income of the SSC employee is more than 2 lakh rupees, then travel expenditure is taxed. So 3 types of expenditure are there. First, treatment expenditure. Second, staying abroad expenditure. Third, travel expenditure. Treatment expenditure of the patient completely exempted. Example, Mr. X is an employee. He is suffering from a particular disease. He is taking the treatment outside India, foreign country. Then Income Tax Act says whatever expenditure is incurred on treatment outside India and which is reimbursed by the employer is fully taxed. For staying abroad of the patient and one attendant, expenditure incurred reimbursed by the employer, tax-free perquisite. Traveling expenditure of the patient and one attendant reimbursed by the employer. Now Income Tax Act says see the gross total income. If the gross total income is less than 2 lakh, that is also exempted. Traveling expenditure reimbursed by the employer is also exempted. Suppose the GTI of the employee is more than 2 lakh rupees, gross total income is more than 2 lakh, then travel expenditure becomes taxable perquisite. This is regarding foreign. And one point you have to remember, fixed medical allowance, not perquisite. Fixed medical allowance is fully taxable. These provisions will not apply. Allowance is a fixed amount which is given by the employer to the employee every month. Whether the employee has fallen sick or not, whether the employee has taken the treatment or not, fixed medical allowance is fully taxable always. Now next, gift given by the employer. Gift given by the employer. If any gift in kind is received by the employee from his employer or his family member from the employer, tax-free perk up to the value of 5,000. An excess amount is taxable. So if any gift is given in kind by the employer to the employee or their family members, the Income Tax Act says up to 5,000 is exempted. If the value of the gift is more than 5,000, the excess amount is taxable. So these are the different provisions regarding the perquisites. So last video we have seen, and this video we have seen the provisions regarding the valuation of perquisites. So if you are satisfied with the lecture, give a like to the video, share it in your group, give your comments on these lectures, and lastly, don't forget to subscribe the channel.